Hey everybody, good morning. Good morning, morning. Happy Christmas week. How's it going? Welcome to the show. Welcome to the show. And let's see, we've got Donald, Dan, Rob, Arturo, Ed, Diane, Mark, and more channel members: Rex, Darren, Sergio, David, Swinburne, Will, David, Kathy. Welcome everybody. And Goose is in the house. Goose, glad you can make it this morning. All my other channel subscribers, welcome to the stream. Like Jan, Robert, Craig, and Helen, Anthony, Ellen, dun, 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 Diane, Maurizio, Ed. And if you're tuning in and you're like, hey, how on the devil do I get to chat? Click the button over here in the corner while I'm live. The chat is available. So yeah, I'm cold this morning, man. It's like 20. What is it? What is it, like 20, 29 degrees right now? It's cold. It was 80 in the office on Friday, in this office, like, because it was warm outside. And I had turned off like the whole HVA system. And came in this morning, it's like 60 in here. I was like, whoo, let's bump the heat on. Anyway. Crazy weather in Knoxville. Anyway, it's like we had like, I think it was up to 69 degrees last week, and then today it's like, I don't know. It was like over the weekend it was freaking cold. So welcome everybody. If I'm no longer live, you'll have to leave a comment down below. Back to what I was saying. And let's see, I brought some stuff to talk about because the Fed liquidity. This has got me a little concerned here. You know, the market is 98% correlated to liquidity, right? I mean, I talk about that over and over, and how global liquidity, the market, you know, when I say the market, I'm going to talk about like the S&P 500 is the general broad market index. You can say, why not the Dow, or why not this, or why not that? The Dow's 30 stocks. The NASDAQ is 100 stocks, arguably the biggest, best tech companies set for growth. The S&P is a good broad 500 economies chunked out of, it's kind of our bigger cap companies, just the normal big companies that make this thing tick. And so 98% correlated to that is global liquidity. If you've never heard me say that before, it is. And where's the proof? I don't have it at the moment. So, but checking this out over here. Dun, 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 dun. Somebody messaged me on Slack. Awesome. And QT, better late than never. So this is quantitative tightening. We've supposedly been in quantitative tightening since they started unloading their reverse repo, right? Well, yes and no. Yes and no. We had fits and starts right in here, if you remember. Had some banks blow out right there. Had that emergency lending facility that created a little spike in there, but they've been bleeding down, and the black is the Fed balance sheet. Fed balance sheet, okay? The Fed balance sheet continues to contract right here, getting down pretty close. We were up at like a lot of trillions of dollars. Now we're getting down to almost flat. Almost flat. And so we've got the left-hand side, the reserves, cash reserves, the QT level, quantitative tightening start level, right there. When we started quantitative tightening, that's where we were at the blue level. We dipped and we popped and we dipped and we popped and we dipped and we popped, and now we're back down where we might actually drop down and start pulling liquidity out of the market. So why has the market been going higher? Well, the liquidity's been high. So this is concerning to me, if you will, that there's no cushion left in the system as the Fed balance sheet continues to contract, and the Federal Reserves, the reserves are starting to be low. Where does this all go? This leaves very little room in the system to absorb big down days. This is what it kind of concerns me. Now, there's the reverse repo will probably never go to zero because was it money market funds need some exposure to that for the overnight. It's kind of, they need that liquid cash that they can just pump in and out. So they'll probably keep using the reverse repo facility, but we've sucked it down to the lowest level we've had pretty much since COVID happened. It's kind of wild. I mean, you wonder why prices exploded coming out of COVID. Look at that liquidity. Holy moly. Then we sucked it down into 22. And now we're just kind of humming along. We're just kind of humming along here. And this is another thing to look at here. This is the overnight reverse repo and the bill rates. We've got it basically the same. Right, the treasury bills and the reverse repo rates have basically come back in line right here. Now, it'll be interesting if those treasury bill rates keep climbing. DGS2, anybody? Anybody? If the DGS2 climbs, this could create some problems. So, this is all coming to a head. All the things I've been saying for, gosh, almost getting close to 2 years now. I've been talking about this, how raising the rates is going to be a problem. And it's not just an immediate problem. I'm like, they're going to raise the rates. It's probably going to chill out. If you're new to the conversation, right here, cool, drawing tools active. Right here, all the way over here. Back in January 23, we talked about it after we raised rates. I was like, they need to chill the freak out on the rate raises, and they still did a few more, kind of overdid it. I feel like they should have eased up. Now, the reason, you could say the reason that he's kind of softening on his cuts is due to this chart right here. Right here, we have inflation and employment. They kind of bottomed out mid-year. Right back here. Now we're getting inflation climbing again. This is CPI for goods. This is that acyclical inflation I was talking about. I found you a chart. For those of you who are like, show it to us. Look at that. Almost 1% climb on that acyclical inflation. Yeah, if anybody works for Monster, like, I'll take a Monster subscription, man. I'll take a sponsorship. I drink them every day. And take some swag and even take a little cut for promoting. I do the. I'd even wear a shirt that said Monster on it if I was properly compensated. Anyway, this is, you can let me know what you think in the chat, but this is interesting to me that all these things I said like 2 years ago, all these things I said. Now, the reason I call it the Morning Monster Show, for if you're new here, the reason it's called Morning Monster, I don't drink coffee. I don't drink hot liquids. Funny quirk about me, maybe it's the ASD. I don't like hot liquids. That's soup, that's stew, that's chili, that's coffee, that's tea, that's you name it. Hot liquids, apple cider, hot cocoa. I don't like hot liquids. So morning caffeine is 1 Monster a day. I drink the 0-calorie one. Freaking good flavors. Anyway, so this concerns me. I'm glad you have. I'm glad we're liking the charts. Hopefully you like the conversation, but This is a slow mover, though. Remember, this is, when we move the economy, it's like moving a 100-mile long train. You don't just speedboat flip that baby around, all right? Cutting rates doesn't have immediate impacts. We're just coming into the last. It takes 24 full months for interest rate changes to bake through the economy. We're just coming into those last few rate raises fully cooking. It won't be till mid next year before they're fully cooked through the economy. These cuts that they started doing here won't be fully cooked through until July 26th. And that's the first couple cuts. All right. This is like a two-year lag on this baby. That's fully getting through all the bank accounts, all the everything. All right. Now, interesting what happened. I mean, look right here. We've got this baby climbing. It's into the window. Like they cut a quarter point. So it's a target window. It's a range. They're not actually like setting the rate to the decimal point. It's actually like they cut it down to this zone where it's 4.25 to 4.5. That's the range they're going to try to shoot for. They were in a 4.5 to 4.75 before the cut last week. But look where the DGS2, that 2-year constant maturity rate is. It's right there. JT speculated we see these cross back here. When I said this 2 years ago, time is the hardest part of this whole baby to predict, of course. I should have figured it would take 2 years for it to bleed off. So here we go. We're about to find out what's about to happen. So anyway. Hey, don't talk about red cans, man. Red cans make the market go down. When I drink the red Monster, anytime I drink a red Monster, the market goes down. Like it doesn't matter. Even if I try to fool it and drink it and then put a different can up here. When I drink the red Monster, I've been drinking them on the weekend when it can't make the market go down. And supposedly they're discontinuing the red one and putting in some new flavors. The new teal guava flavor is interesting. Anyway, I can talk Monster. Hey, thanks, Al. Thank you for becoming a channel member. I appreciate it. All right, I should flip over here before we get into trades. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. That means because I predicted it in the past, it may or may not come true. I sometimes get lucky, more often than not. That's why you're here. But I make epic predictions, and sometimes they come true. Just kind of the way it works. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. So no stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. If you desire personal financial advice, you need to hire and consult a financial advisor. I've been talking to one lately. I think I spent 4 hours talking to one last week. Got another meeting today. If you want to get hooked up with a financial advisor that can talk with you on Zoom, let me know. They were like, hey, thanks for the shout out. We will talk to any subscriber that you got. So if you want more information about that, contact me on Discord. I'll hook you up with their contact information because they were definitely up on talking to more people. So I'm filling some gaps in my big picture plan with their help. So there you go. It's always smart to take care of your family and take care of, planning to fit, failing to plan is planning to fail, as they say. So I am working on my big picture financial plan, looking at, JT's in his low 40s. We're looking out to the JT's 70s. So 30-year plan. So this is not something that's going to come together today. So if you need something like that, let me know. I'll hook you up. So this week is Christmas week. Dun, 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 dun. In case you didn't know, Wednesday is pretty much closed around the world. Right there. Pretty much everything shuts down except for crypto. Crypto will still be open because it's always open. And we have an early close tomorrow. So that'll be a unique day. I will not do 30 minutes of awesome tomorrow. I have a son whose birthday is, and that's Christmas Eve, and there's lots of things that happen in the Termire house on Christmas Eve. So I'm going to not do it that day. I may do it Thursday. I haven't decided yet. So when we come back at it Thursday, the market be back open. I'll be back live. I'll be live tomorrow morning. Just throwing that out there. I'll be live tomorrow morning. Early close. I'm going to quit and go home. Then I'll be back on the 26th. And we'll do it all over again. This is a full day. And then a full day Friday. I don't expect a lot this week. So we've got like a Monday, a weird day, another Monday, and a Friday. So we had 2 Mondays and a Friday in this week as far as the market's concerned. And it's just going to be a weird one. It's going to be a weird one. And then we get to do it all over again next week because we have New Year's is closed in the middle of the week. Not expecting big moves out of this market. Rongamer kept talking to me. What do you think's going to happen the next 2 weeks? I was like, dude, the next 2 weeks, low volume. A lot of traders aren't going to be like, people are going to be out celebrating. In fact, we started seeing volume drop off drastically on Friday last week. People just taking off. Like big traders, they're kind of putting the computers on holiday mode. The algorithms kind of dialing it back. Usually we get a choppy drift higher in low volume environments. Now, anything can happen. Any crazy stuff could happen, but general expectation, lower volume, choppy price action that kind of grinds higher. That would be the general outlook here. Hey, Steven, thank you for becoming a member. Speaking of financial advisors, I might know one. All right. Might see one in the chat. All right. So that's kind of the outlook for this week and next week. Not a lot of economic news. Like we get a few numbers for the U.S. here, but not a lot here. We get our normal unemployment claims and crude oil on Thursday. But even the Fed's kind of taking the next 2 weeks off. Not really dumping much out. We might get some numbers next week. No, looks like we don't even get the employment numbers next Friday. So that'll probably be pushed out a week. Pushed out in the second week. Yeah, this is really back to work week right here. So the next 2 weeks just going to kind of be a grind a little bit in the markets is my primary expectation. The list is really small today. So let's start jumping into it, shall we? Looking for trades, looking for opportunities. The overnight action on ES has just been a grind. Possibly that was a low right there. Looking at the bigger picture here. We had that dip right there on Friday. Had that dip right there, and then a nice reaction. That was a big update on Friday, right? Couldn't quite make it to. I was hoping we'd get to 6,000. Looks like we got right knocking on the door, 18 points away, and then gave it up. Kind of ground it down into the close. Let's make another attempt here. Pop it up. Let's see. Need to hit that roadmap line right there. Now, let's clean up the chart. Oh, need to clean it. 25 drawings. Not sure I want to remove that many without looking at it. Let's clean this up just a tad here. So that's the low we have right there. Now, markets don't tend to bottom on Friday, but that was like an open at the low and we ripped hard reversing. So there's still that chance, somewhere around 90 to 95% of the chance we don't make a big market bottom, SPX bottom on a Friday. We just don't. Typically, Monday, Tuesday, Wednesday, but Tuesday and Wednesday are weird days, so we could make another bottom this week. Just throwing that out there. It could happen. Support right now, hanging out right here. That 618 retrace. So if this continues to grind down a little bit, Looking for that to hold. If it does not hold, we're going lower low and fulfilling the prophecy of don't usually bottom on Friday. So that's the warning zone right in there. Right around that 5,900 to 5,880-ish area right in there. If we come down and test that, we want it to hold if we're going higher. Now we may just grind higher. Like this week, we may just kind of be low volume, and we just do this for the rest of the week, and we don't really make substantial progress doing anything. Be careful. All right. That was a pretty big up day. Like that rip right there off the low to the high, like 150 points. Absolutely wild. Absolutely wild. That was a big up day. Took a lot of energy out of the market. So we're probably going to chill out for a day or two, would be my guess. If not, come retest this right here. Would just be expected. If we do that, hold here, it sets us up for a nice potential. But can the market do it on a holiday week? I don't know. Don't know. There's the high. Here's the low. It would set us up for a rally back to this kind of area right up in here. That's the move it sets up. Now, can it do it? I don't know. And if we don't come down here, probably just going to grind into the roadmap line there, that 15-minute. Why the 15-minute? Well, 5 minutes, we're already broke through and we're kind of retesting from the top. 1 minute, and that's too fast. 30 minutes, we didn't even get anywhere close, so we'll probably find some resistance when we get up there. The 1 hour, kind of got close. Didn't really touch it. The 15 minutes, the one that shows. All right, 4 hour, we bounced. This is promising right here. That's why I'm thinking maybe we're going to bounce. Now, if the 4 hour breaks, this is where to put your red alerts. 4 hour breaks, get down into this zone. That opens up going down to the daily roadmap line. Dun, dun, dun. Right down in here. Here's the zone right now. It's kind of climbing. So the longer this takes, the higher this becomes. So somewhere in this 56 to 5,700 area right now would be my expectation. And that's if we start breaking down below this 5,800 area right there. That's the big picture outlook for the next several days. If we start breaking down, that's what we're looking at. If we start breaking up, upside targets probably on up here. 6,300 is probably where we're heading to once we get through. Let's just clear this off and draw it really quickly. So that puts us up to that 6130 area right there on that bounce. That'd be a 1, 2, 3, 4, and we'd probably get the 5. It'd probably be a 4 back here, and then a 5 that would take us right up there. Now, confirmation on all that. Removing some fid lines and cleaning it up. This high right here, this low right here, we break above this resistance zone right in there. That's probably the key that's telling us we're going on up. And look at that fib line, that target fib line right at the top of that oval I drew. So 2 different ways to do the fibs, and they line up on the same exact place. Can't make this stuff up. Looking back down, the 1 hour, right in that zone. Look at that. That's funny how this lines up, right? Look at that. Look where the 1 hour is, right in the middle of that 618. There's substantial resistance right there. Can't make this stuff up, man. The market just makes these proportions, and it just happens to work out. It's creepy. So if we get through that 6,000 area, we're probably cruising right on up here. New highs. Probably going to happen. All right. S5TW. Let's go look at the market oscillators here. Check this one out. This is stocks above their 20-day moving average right here. Never seen this. We're in reversal zone. We typically only hang out here 3 to 5 days before we get a big reversal. We're on day 3 right here. 3 to 5. May not pull up out of here until later in the week. Could add today, tomorrow, holiday. So it could be Thursday, Friday before we see an update. Yeah, people, Christmas cheer, whatever. I can see all the headlines now. S5FI pretty much hit the 20. Waiting for it for a while. This also setting up for a reversal higher. Now, this one doesn't have to go back to the top, although it may. It may stall and come back for another revisit. So, be careful. This one tends to grind a little longer. So we may see something like that. Of course, we could bottom it out with a double bottom lower. So this could be the first tap. We see a recovery and then we go deeper. That's entirely possible on S5FI. Don't read too much into it. This just stocks above the 50-day moving average. It's a giant market oscillator. Typically, we come down here, we make a reversal, then we go up to the top, and then we work our way back to the bottom. It took us a long time, a full year, to get from here back down to the bottom. So it doesn't have to be fast. Although we went from up here at the top just in October to now being at the bottom. Despite the first time we hit it, took us a while to work through this. We'll eventually go back to the top, and then we'll come back to the bottom and go back to the top. It just happens over and over and over. The giant market oscillator. This is indicating a reversal conditions for going higher again are setting up. Stocks above the 200-day, even slower. You know, we started fast and we're kind of going slower. This is still indicating that the general direction could be down. We could see a further decline. Now, trend lines are the least reliable technical analysis tool, but right now we kind of have this trend line cooking right here off these two lows. Sloppy. We may come down and test it again. Could push us out even higher before we break down. If and when we break down below this trend line, we're probably going for the bottom. And that's stocks above their 200-day moving average. So this is a much longer running moving average. Why not use all my fibs like the 144 and the whatever? Well, guess what? They haven't caught on. The market hadn't caught on and made a 144. These are built in. These are just indexes. They're on several platforms. S5TH, S5TW, S5FI. They're just commonly used. All right. I use what I can use. I could probably try and invent my own 144, but hey, Terry, good to see you. I'm glad you like my hat. All right. Yes. Jumping in, checking it out. Bouncing. So we broke through the 15-minute and we're retesting it right here. So we've got a little bit of different pattern cooking on ES, which is the S&P 500 futures. I like to look at the futures because they don't leave much gaps. All right, we had a little baby gap over here on the reopen between Friday and Sunday. We quickly filled it right over here. So how do you know what S&P's been doing since it reopened last night? Look at the futures. Be like, why don't you look at SPY? SPY is an ETF. It's a derivative. It has costs and management and skew and this and that and the other and people involved. I just like to look at the futures and the cash index. I go for the most reliable information. Now, this is looking like we might bounce right here. Look at that beautiful 1, 2, 3, right into that 15-minute. That's setting it up. If we break through, you run a fib from that high to this low, break through the 618, probably setting us up to potentially rally on up. And that'll take the cash index with it. So looking down here, this is kind of showing us, filling in the picture, right? Break through that 618 right there around 6,025. There is a price discrepancy between this and the cash index. Futures are kind of like options. They have a little bit of time value built into them. This contract is now for March. So as we go from now here in December to March, that discrepancy between the two of them will slowly erode and come to almost zero by the expiration of the March contract for the futures. If you've never seen this before, it just adds an extra wrinkle. And for those of you that have never seen it at all, we just do a little math on the ticker here. Right, like this, jump out to the daily, and you can see the price discrepancy in the futures contract. This one opened at a near all-time high and will bleed down as we get to March. There's the bleed down schedule right there. Get down almost zero, and then we roll out to the next month on the futures contract. So there's your price discrepancy between the futures contract and SPX, the cash index. There's a fancy name for it, like when you see them like this, it's contango. When you see it the other way, it's backwardation. When they're underneath zero, yes, that happens, it's backwardation. So if you went over here and you said, BX1 exclamation point minus VIX. See this one, negative. That's backwardation. See, this one's a lot more chaotic. Get some big backwardation. That's why this going into backwardation is why a lot of those leveraged VIX things like VXX, UVXY, that backwardation costs big money to try to keep leverage. And that's why they erode and go to zero. Like that one right there. And VXX, that's why they're declining assets. You let me know in the chat if that was helpful, beneficial, helps you understand how this whole thing works. NQ, kind of the same pattern as ES right here. Potentially bouncing, actually holding a higher low. Not too shabby. Now we may see this dip down to a lower low. That's a cautionary potential sitting out here this morning. Could dip it, but if we break above this high right here, we're probably going on up. And the next level for NQ, I really want to work out. Like, this is the one I'm kind of got my eye on more than anything else, because we broke out right here, struggled, then ripped right up through the targets, then retested the breakout right there. Right there, we retested it, that low right there. Now, let's giddy up and go. Let's go higher. Let's go to the next target right up here. Around 23.2 possibly. Depends. Put it on log mode. Looks even better. Gets us closer to 23.5, maybe even 24. I'd say let's go. Let's go up. Let's keep this intact. Let's go higher. Let's grind it right on up there into the inauguration. Shall we? I like it. I vote higher. I'm not bearish. I'm not a perma bear. This one worked out like this. If you did this trade, hopefully you made money. I talked about it, that I was buying a spread, covering that drop. Guess what? It did it all the way down to the roadmap line. Now I expect a bounce. Doesn't have to bounce, but I expect a bounce up here to about 23.80. If we can get through that, we could go new high. If we don't and we turn down, we'll probably go on down to 2100. So I'll be watching very closely when we get up to here. It doesn't have to go up to there. All right, be careful. We could just roll on down. This is not a high probability trade right now. I'm not adding anything to take advantage of this. If we break out above that, I'll probably trade for that. If we don't, if we come up here and we bounce down, I'll probably trade for this. I don't trade the downside very often, but when I do, I tend to make some money. So CL, just continue to grind. another analyst I follow that does Elliott wave stuff, he was like, both sides just have oil stacked right now. It's a game of who blinks first. Do we blink and break out, or do we blink and break down? Hanging out in this watermelon seed squeeze, most unreliable pattern ever. It can break higher, it can break lower. I can make a case for either one. Almost equal. Probably just going to keep doing this through the inauguration. Keep bouncing inside. Gold was looking pretty good in the pre-market. Now we're starting to give it up a little bit. This got me concerned. We could see another flush right down here. This did not hit ideal downside targets like silver did. Silver might be running ahead. We hit ideal targets. This, while we could go a little bit lower, the top of my target oval right there, we hit the minimum correction price for this to bounce and go explode higher. And this has been lagging. When you zoom out and look at the big picture, I have to look at a real big picture here. This has been lagging severely. Like if silver and gold were aligned, silver would be up here messing around at 60. And gold ran all the way up to the 1618 already. And it can retrace and push on out. We could possibly get up to like 4,200, 5,000. Seems like crazy numbers. We could. I'm only thinking 2,900 right now. Take it one day at a time, maybe 3,000. I think gold's probably further along. Going to need more consolidation before it can push even higher. So silver, the better potential. It doesn't have to sign one exclamation point. It doesn't have to catch up, but it has a big opportunity to do so. And look, if it got up to the 1618, look at this kind of opportunity right now. Ooh, I'll take that number. I bought 30 strike SLV calls last week. I started reloading after I got out. Reloading very carefully. And I'm buying out to 2027. Far out as I can to try to get this exposure. When we were right there, something didn't look right to me. I closed all the short-term stuff, and we got the retrace. We could still go deeper. Still possible. I'm very cautiously adding back. Saved myself like almost $3. Bitcoin, be careful. I'm afraid this is going to come back and retest the breakout at the minimum. That breakout is right down at the roadmap line. Ugh, not great. Not great. Now, I really want to see it hold this consolidation we did here, starting about, right before Thanksgiving. I really, really, really want to see it hold that area. If we start getting below that at all, probably coming back down for a breakout test. This breakout right there, and it can go as deep as down here. You see the numbers, right? Ugh, that'd be pretty wicked. That's going to shake out a lot of weak hands if we do that. That's going to flush out a lot of people if we go down another $2,000 or $20,000. $2,000, $20,000. Whew. I don't even want to think about that. Ether kind of being gnarly. Haven't broken out. You could say this is like Ether's the silver and Bitcoin's the gold, but at the same time, they fundamentally changed Ethereum back here, September 22, and it just hasn't acted right ever since. Like, it's just not doing the thing I need it to do to expect it to go up here. So reluctant to say it's going higher. It may be in this permanent like consolidation for a while. Permanent. It may be in a long duration consolidation area. Just failing to break out, failing to break down, just not doing much. DXY, dollar. Let's remove that at this point. Didn't do that. Didn't do that. Roadmap line cruising on up. We hit the target. Like that was the long-term target I had from all the way back over here in September and 23 when we were popping up. I was like, well, we might retrace and go pop at that. Well, we did a deeper retrace. It took a lot longer, and we finally popped it. Where does that all come from? Look, I mean, simple. Run the fib high to low. It's right there. It's the 618 of that whole big drop. If we respect this level, turn down, we're going lower low. How much lower? And this could take a while. This could take a number of years because this took freaking forever so far. First move down, the retrace, right down there, mid to low 90s. 94 is the minimum. 90 would be the ideal 1272, and if we got a little spicy on the downside, 86. Whew. Thought the dollar was being strong. Yeah, watch for that to play out. Oh, man, this could take years. Like it, I mean, it could go fast, but it could take years. It could be 27, 28, 29, 30. I don't know. Could be a while. Looking at global liquidity, just kind of churning. Held here. If we can break out and go higher. This is suggestive that other central banks are kind of keeping us floating and we may explode higher, but it could be short-lived. If we get up here to 44,000, I'd watch out for a big negative reaction off of that level. But it may swell, like the NQ and SP may swell higher to those extension targets very quickly if we can break out higher on NKD. All right, I go pull everything moving $2 or more up, put it on the gainers list, $2 or more down, put it on the decliners list, and let's check them out. This was a rejection of the roadmap line. This held the 618. So now we're in a big question mark. There's resistance. We popped up, hit that 618 there, gap, and just retraced deeply, but we held a higher low, and now we open right here, gapping up, but looks like we may break down and go lower. I am not putting any money back on this until this clears up. Either makes a lower low or we get above the roadmap line. And then I'm still not sure I'm going to put any money on it. Had money on it when we did that candle and closed right in here when we did this secondary chop. And then it dropped, or maybe it was right here. One of those two I closed and then only made a few bucks. I was expecting to make pretty good money because that went from like 900. I was expecting to make about $100 per, about 12% return per share. Only made like 4%. Bummer. Only 4%. Tesla. Spicy. Oh my gosh, I got a new version. Full self-driving this morning. The one last week was pretty good. It's getting sick how good it is. It's pretty amazing. Needs a little work on the, as somebody eloquently put it on Twitter or X or whatever platform you want to call it. Somebody eloquently put it, the first 20 feet of your drive, I'd say the first 50 feet of your drive in my case, and the last 50 feet of your drive still needs a little work. Everything in between, pretty darn smooth. Pretty darn smooth. It did aggravate a driver that was behind me. It cut him off twice this morning. Then they tried to shortcut me, and I took it off FSD and went faster around a different shortcut and beat them to the light again. They were really upset. It was kind of funny. Anyway, that one probably going on up to 500 after we get through this consolidation. We're retesting the breakout. That was a breakout from these prior highs over here. Retesting it. If we can hold it, go higher, but watch out. Coming into earnings here in a few weeks. 4 weeks, 5 weeks, 4 weeks. So what we got? 1 week, 2 weeks, 3 weeks, 4 weeks. 4 weeks from now. We got about a month. And then we got Tesla earnings coming up. Yeah, dude, I mean, FSD is really good. I mean, like, if you haven't tried it out, maybe you tried it out 6 months ago. Maybe you tried it out a year ago. It got stupid good in the last few months. Like, I can't even... It probably drives better than 85% of people out there. That's what I would say. Maybe 90%. I mean, there's a lot of bad drivers. The one from just a few months ago drove better than my parents, but now it probably drives better than most people out there. It probably drives better than you do, honestly. If you really, I mean, it pays attention all the time. It doesn't miss a beat, and it's watching 8, 10 cameras all the time, and can make reactions. I think it has the ability to react, 3 times a second, running through the whole AI model. And people are like, why is Tesla climbing like a ridiculous amount? That's a real world AI application that has the potential to save lives. Think about it, 120 plus people die in the United States every day in car accidents. The robot drivers, hey, yeah, it got leaps better in the last 6 months. Crazy better in the last 6 months. So, yeah, watch for this thing to rock and roll, man. If they announce a licensing deal, this thing's going to the moon. TRAW. Now it's probably going to do a deep retrace at some point. Like earnings, probably going to do a retrace. So TRAW. Goose flies, little F-16. Yeah. This is Biotech Informa. Stay the fudge away. Just don't. All right, QMCO. Quantum might be playing out here. I would be very, very careful. Be very, very careful. Coming up into a resistance zone on Quantum. I think it might be overplayed. While yes, it was exciting and Google announced all this crazy stuff, but real world applications still probably not going to solve giant things. Everybody's like, oh, it's AI. AI, while similar in nature to quantum computing, quantum is very much about solving fixed solutions. AI is very much about fuzzy solutions. It's just like our brains, right? We ask 10 people, you get 12 answers. It's a fuzzy solution. Quantum is about getting the exact right number of a very difficult problem, like cracking encryption. All right, take a long, long time on traditional computers to crack encryption, but because of the way the probability-wise way that quantum works, it can come up with a solution that might work, and it can do the probabilities very quickly. It's kind of weird. It's almost spooky. They can't actually explain the entirety of how it works. So, DESP. Nice pop. That was almost to the roadmap line and up at the target. Not really giant opportunity there. AVGO. Yeah, TSL. Yeah, that was a smooth pickup there. Wrong armor picked up. You're right at it, man. Right at it. Maybe it was popping this morning, but now starting to drop a little bit. I'm looking for that. I sold 56 strike calls against almost all my shares. Picked up some on Friday with 37 calls against them. I think I picked up some more with 32 strike calls against them. And with the close, I kept it all. So be looking to resell some calls this morning after I get off here. And AVGO. That's in the played out zone. Watch for the retrace. what I would say on AVGO. NVO probably going down to the target zone around 97. Oh, it already did. Never mind. Should take this off because we're already below it. Yeah, I remember Friday we hit the extension target. We might. Now we already did fully test that gap. Look at that. Well, now we're in the zone to potentially reverse. But if we continue to break down below the bottom, let's just take all these things off. Whole new world now on NVO. If we break down below the bottoms of that, this will be the new target area somewhere in here. If we can maintain this right here, the resistance, funny enough, right up here at the roadmap line and the 618, and then we get above that, we can look higher up here, possibly even up here. I'd be one to keep an eye out on right there. Seems that GLP-1 drugs come kind of running their course just a little bit. Although we saw Lilly at the top of the heap needing a slight bit more retrace. If Lilly catches up to NVO, we could see a much deeper retrace. This one finding support all the way down here, like 300. That'd be like a 50% retrace. Yikes. Just be careful. Be careful chasing GLP-1. Excuse me. Be careful chasing GLP-1 drugs. App. Potential to reverse right in here and come back to the roadmap line. HMC. Oh. Honda Motor Company, man. What happened? What happened? Just a big sideways chop. Hasn't really gone anywhere for 2 decades. That's not your giant opportunity right there. I hate to see it, but arguably a great company, but horrible at managing stock. I probably wouldn't trade this at all. ALGS, Biotech Pharma. Be careful, you lose your shirt. That's the lowest low. Can't really do anything off of that. QCOM. Looks like we're coming down into the zone. Ideally, I expect 141. If we don't hold that, though, we could go on down. Rumpelstiltskin. Rumble here. Rumpelstiltskin. Rumpelstiltskin. I know I'm saying it wrong. All the way up past. Wow. So switch to guns. Different fib tool. That high, that low. Clear this one off. Potential for this to rally. If it's going to rally higher, if it's going to be bullish, do a breakout, we might get all the way up in that target right there before we retrace. And that'll be a break of the all-time highs. Not too bad. I mean, if you got in now, that's a potential double. Is it high probability? Not really. Be very, very careful. Why not run the fib from here to here? Because that lowest low negates everything to the left side right here. This lowest low on the charts, all this price action over here doesn't mean jack squat really, except the all-time highs. RGTI. That's another quantum play. Be careful. Qubit, another quantum play. Be careful. Nook, another quantum play, I think. Be careful. That's a reverse split. That's a dumpster fire in the making right there. Came back up to the SPAC price. It's a SPAC and it's a dumpster fire. And be careful. that can just rock and roll back down to the bottom. RELI, another dumpster fire. Be careful when a bunch of these start showing up in the charts in the morning. Kind of indicates low volume. Astrolabs, potential to going up to 152. DXYZ, potential to come back down all the way to the bottom. GTBP, another dumpster fire. Don't mess with it. DSLR, that's leveraged Tesla. Retracing a little bit. Potential to come on up here to 80 if we get up to that 600 level on Tesla. PLYA, playa. Broke out of the years-long consolidation. Wow. It's been kind of grinding, and we popped into the higher consolidation from further years back. If we can maintain the breakout here, this could actually develop into something bigger. Let's see what we got. That low, that high, that low, maybe something up to like 40. Possibly. It's going to have to stick here. We're going to have to get the daily close up here. Probably more than one. And then it would convince me that we're probably going to rock and roll at least up to here. If not, on up here. And those are big numbers, I know. Like, that's really big numbers. Maybe it's not log scale. Maybe it's more like this. This actually looks better. That low, that high, gets to the 50% retrace. So maybe more realistically, we're only going to get to about this level right there. Why log mode sometimes? Why not? Not log mode sometimes. Really depends on how the chart's moving. Like some charts look better in log mode. Some charts look better not in log mode. This one hitting ideal fibs in not log mode. It kind of depends on how the algorithms are programmed. All right. Programmers make choices when they program algorithms. Sometimes they use log mode in their calculations. Sometimes they don't. This one looks like they're not. For the algorithms, messing with that one. MSTR. Be very, 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 very careful here. This wedge consolidation. We broke out the bottom last week. Very quickly, it can come back to this 200 to 240 area. Very, very quickly. I lighten the load on MSTR. I'm just holding the shares I have from $100. And I'm willing to watch it all go away. I actually bought those shares pre-split. And I have the post-split shares for about $100 cost basis. Coin, this really looks like it's coming back down to the roadmap line. Right there. It's gotten below the breakout level. That breakout from back here in March, that high. We're kind of confirming we're breaking below it. Do have a little bit of support from these prior highs, but we get below that level right there. It's probably coming back to the roadmap line because it's not that far away. So about 250, we get below 250, we're probably coming on down to 240, 230 area. 230, 240. ARM. Uh-oh. Uh-oh. For all those people that told me I was wrong, ARM wasn't going to retrace. Uh-oh. Watch out. Be careful. There's the high. There's that violent consolidation. We could even go lower low. Be careful. MSTX, like I said, I am no longer on this one. This could do an 80% retrace. If we get down to this $16, $20 area right here, I may load back up. I made crazy money selling puts. All in here. All in here. Sold puts like crazy. And then something told me to GTFO right there. and I've just been waiting. It's kind of like the silver thing. Like, I just got a feeling like now's the time to GTFO. FAS still retracing. This may retrace just a little more this week. If we get to the roadmap line, might be an opportunity to pick some shares up. We'll see money rotate quickly into financials that first few days of 2025. Probably. I mean, it's just likely. It doesn't have to happen, but just likely. When these all report earnings, we'll see money flow into them before that. So 16th, so you got 3 weeks-ish. JPM, 15th. Morgan Stanley, 16th. Let's see, Morgan Stanley, Chase, JP Morgan, Bank of America. That's most of them. MB. Wells Fargo. That's the other big one. 15th. Can't remember region. RF. These are all looking like they could bounce. Like, look at these. These got all rock and roll. If you're going to maintain the roadmap line. Oops, missed my drawing tool. Maintain the roadmap line. Break above that. Set up for the extension. All looking pretty good. That one may come back to the roadmap line, though. JPM. And then looking at these, MasterCard. That's kind of cooked. Visa, kind of cooked. Watch out for retrace in those. DFS. Oops, DFS. Look like we're still retracing. And Capital One. Yeah, credit cards need a retrace, so be careful. Be careful how you play financials if you're going to play it. And FAS may just be the way to play. Like, if it dips here, pick it up. It's 3x leveraged. If we're going to bounce, it's a nice play, but watch out for the breakdown because we could go back down further. And last but not least, EETH. Ether Pro, probably coming back to the roadmap line right there. Watch out for that. And then possibly bounce or break on down and retest this consolidation down here. That's kind of the long and short of it for EETH. Pun intended. All right. Bonus trades. I don't really have anything great high conviction today. Although SVXY from Friday, man, I bought some shares of that. Rocking and rolling. Nice. That big pop in the S&P. This, if we're going to go higher, if we're going to break out of this funk, like that may be pretty nice. I bought shares. I did buy shares like right there on Friday. And that was a nice little draft up. Couple bucks. Could keep going. Right there. If we're going higher, this will probably suck it up. And then watch out. Like this, the whole market could take this up higher. And we top out. And then we get the implosion. That'd be pretty wild. So have a great one. We'll be back with you 9:15 tomorrow morning. Same bad time, same bad channel. Do it all over again. Look for what's moving today. Or today, tomorrow. Remember, no 30 minutes of awesome on Tuesday this week. I'm thinking Thursday. I'm open to feedback, whatever day you might be available. Have a great day out there. Be safe. The account you save may be your own.